Hey everybody, JJ here. It is Tuesday, April 14th, 2020. Just wanted to chime in. There's a lot of news out on the housing front and the housing bubble. Today we're going to cover the topics. Is this the kickstart to housing bubble implosion? Should add housing bubble 2.0 right there. 2 million plus missed mortgage payments so far. Lenders are tightening up on the borrowing standards. That could cause further downward pressure on prices and demand. And also this monster bear market that we're in, is it going to be too big of a disaster, disaster for governments to stop? We'll talk about what that means and more. Let's start right here. So here we go. This is a clip from a Wall Street Journal article. 2 million homeowners are skipping their monthly mortgage payments according to the industry data. And that is a number that is forecast to rise further as more Americans lose their job as a result of the pandemic. Now let's take a look here. This is also out of the same article here. Approximately 3.74% of all home loans are in forbearance. And they want me to subscribe to get the rest of the article here. But it does tell us here that only last week it was only 2.73% of all homeowners in forbearance or behind or missing their payments. So it's up 1% in just a week. Imagine if we continue at this pace, this trajectory, we could see in just 20 more weeks that 1/4 of all mortgages are going to be missed, or the payments are going to be missed or in forbearance. That would be 25% of all mortgages in the United States. That's a tremendous number. Now, we don't know if this sickness and this lockdown is going to last that long, but imagine if it did, how bad this is going to be for the housing market. Or I should say it could be bad for the housing market, but better for those people waiting to buy, waiting to get a price that actually makes sense on a place to live. But also, let me add to that, even if the economy does get unlocked or the lockdowns are finally stopped and people can go back to work, how many of these jobs, how many of these small businesses and jobs are going to be not returning? A lot of jobs are not going to come back. This is going to be a permanent scar on the economy, and unfortunately it's a lot of the smaller businesses that may not be able to recover from this, and who knows, maybe some big financial institutions are going to fail, the ones that are not going to be bailed out, I should say. We might see some big company and some big bank failures if the government, if the Fed, I look at them as one entity, the government and the Fed, if they let these entities fail. And we have to go back again to housing bubble 1.0 back in 2008. When that went bust, we have not learned anything. These banks are loaning out money they don't have. They're loaning it to people with less than 20% down payment, especially the government-backed mortgages, the FHA loans. And sadly, most mortgages out there now are less than 20% down payment, a lot less. And we've covered the statistics many times on this channel, so I think most of you know this, but I just want to reiterate this, is because this was all foreseen. This was all gonna happen. It was just a matter of time. Now, this whole sickness outbreak, this was the pin that popped the bubble, but here we are again. Only after a couple missed paychecks, we have millions of people unable to make their mortgage payment. So that should make it pretty obvious that the lending and the mortgage lenders were not being cautious on who they lent money to. If someone borrows money for 30 years on a 30-year mortgage, all we do is look back at a couple years of their income, and the lending standards have loosened over the past decade since housing bubble 1.0, right? So we have people that go out and they can borrow as much money as possible to get into the monthly payment they can afford. But if one thing goes wrong, if somebody gets sick, or if somebody loses a job, or if you have an unexpected repair, or maybe some home damage, maybe some wind damage to the roof, people have to continue taking on increasing amounts of debt. Now, when home prices continue to rise, that's fine because people can refinance, and especially when mortgage rates keep on going lower and lower, people continually refinance. Even though their monthly income may not really meet the cost of living, they can get by for a while by refinancing. And we did see a big surge in refinancing, which did buy some time for many of these homeowners. But this is now the pin that pricked the bubble, and this is going to be a mortgage disaster, and we're going to see bigger bailouts. But the wild card has been government intervention and what banks are going to do in reaction to the situation. So on one hand, you could say, well, the banks, they're going to get endless bailouts, so they're just going to keep on letting people borrow money that really don't qualify for these mortgages. Well, what has happened now is banks are actually tightening up the lending. So on one hand, they have endless reserves from the Fed that they can get liquefied with, but yet they're still tightening the lending standards. So this is going to help pop the bubble even faster. So lenders are tightening up. Let's take a look at what type of action is being done here within the lenders. And it was outlined pretty well here out of the CNBC article. Here's why it's suddenly much harder to get a mortgage or even refinance. So still record low mortgage rates, but now people are not going to be able to refinance. That's going to be a disaster for people looking to get cash to continue to make their monthly obligations. So this 2 million number is likely to get much worse in the coming weeks. Okay, excerpt here out of this article. Mortgage credit availability in March fell to the lowest level in 5 years, according to a survey by Mortgage Bankers Association. Lenders cite a large drop in liquidity as investors in jumbo mortgage-backed bonds pull back. Jumbo loans are those valued above the conforming loan limit of $510,400. Now that seems like a lot, but here in California, Southern California, in San Diego, it's about $700,000 median home price, even higher than that now. So these make up a big chunk of mortgages, especially in bubble markets like California and other bubble cities with high home prices, and now we're even beyond where we were, higher than the 2008 home prices. And an example is laid out right here. JP Morgan Chase, one of the nation's largest mortgage lenders, changed its underwriting guidelines as of this week. New mortgage applicants will need a minimum FICO score of 700 and will have to make at least a 20% down payment. And you know how many people have 20% down? Not very many. Unless home prices come down a lot, it's going to be a very small fraction of the home buying population that can come up with that 20%. So what does that mean? That means that it's likely going to be very difficult even for qualified people to get a home, because you're going to have to likely compete with hedge funds and real estate investors that have cash to pay for these homes. And if you've ever put in a purchase agreement on a home, then you know it's very difficult to get your offer accepted above a cash offer. Even cash offers that don't offer as much for the home still may get accepted, just because the seller knows it's going to be less paperwork and less likelihood that the loan gets denied when there's a cash buyer. So you could go buy a home, let's say for $300,000, you're offering $320,000 with financing, but a cash buyer comes in at $280,000 and they still may take the lower offer because it's cash and it's less problems that could come up within the purchase process. So people that were patient and held back on purchasing because they knew prices were ridiculous, they could likely see some great deals coming up when we see home prices start to correct and deflation. Now, a lot of people out there are still talking about hyperinflation. I don't think that's going to happen at first. I think ultimately maybe, but I think we're going to see a big correction here, possibly soon, possibly not. It depends on how the government's going to intervene in these markets. But ultimately, I see a correction, huge correction in the housing market and other assets, including automobiles, which we'll talk about in a different report. But then I see the bubble being pumped back up by the same thing that happened since 2008. We saw a pump back up of home prices. The bubble was reinflated. Boom and bust cycles are continuing, according to what we can see here so far. All right, also, you have another section of this article here. Mortgage servicers are being besieged by calls from borrowers requesting the government's forbearance program, where borrowers can miss up to a year's worth of payments, which will have to then be paid later. So again, they could delay this because of the forbearance up to 1 year, but there's going to be many people that still will not help. When people have no jobs, no income, think about all the other expenses that go along with home ownership, right? You have the taxes, the homeowners association in some cases, the insurance, the upkeep and maintenance. So a lot of people likely are still going to put their house on the market, even though they have a forbearance or could possibly have a forbearance. It depends on how many of these people get approved for this forbearance. So you're going to see two sides of this equation here. You're going to see the people that bought the homes, and they're going to complain. They're going to say these lenders, they need to work with us. It's unfair that the lenders are pulling back on lending standards and they won't let us refinance. There's going to be that group. Then there's going to be the other group were people that are waiting to buy with cash, with the down payment, and they're going to say, no, these people, They got into a home they couldn't afford. They did not plan for a bad event, and now they're going to lose their home. And to them, that's good because they're waiting to buy at a lower price. They're waiting for the correction. So we have a battle between forces, in this case the government and the homeowners, looking to keep their homes, of course, keep a roof over their head. But the sad truth is a lot of these homeowners are going to be turned into renters, and they need to. Same thing with me. If I lose my home because I can't make my payment, I'm not going to go complain that the mortgage company didn't let me refinance or didn't give me forbearance up to a year because I made my bed and I need to lay in it. That's how I feel, and that's how I feel it should be treated throughout this economy. Also, we see that several non-bank lenders are also raising minimum credit scores for FHA loans, and these non-bank lenders are lenders like Freedom Mortgage and Quicken Loans, which do not take deposits, so they're considered non-banks, but they're still together. They're the largest player in mortgage originations since the housing bubble went bust about 10-12 years ago now. So bottom line is, many people did not learn anything from 2008, and of course not many people, if any, predicted the sickness outbreak that we're seeing. But we've been documenting this here for 2 years. Home prices now are above where they were in 2008. Wages have not increased to justify the increase in the underlying asset prices. And we did see looser and looser lending over the years, and we've documented that here so many times. So we all knew this was going to happen. The question is, are you prepared now to take advantage of the market situation? Well, with the job losses now, people that once had good credit and once had savings may find themselves burning through that savings very quickly, and they may find their credit scores getting dinged as other late payments may come along with this market conditions right now. People falling behind on their credit cards and other loans, their car loans. Think about all the people that took out 6 and 7 year car loans, factoring in that nothing bad would ever happen. And it's going to be interesting to see how this plays out here. We're going to keep you updated on it, of course. But before we go here, recent article out of Redfin, stimulus checks and housing. How far will the $1,200 stimulus checks go for homeowners or renters across the United States? Well, not very far in some areas, not bad in other areas. Let's take a look here. Now, as you know, real estate is regional. We see many parts of the country, especially inland, the United States, not the coastal cities, but inland and the Midwest. Homes are still very affordable, and a lot of them haven't even entered into bubble territory. So we go down here, and they give a pretty good breakdown, a pretty couple extreme examples here. Indianapolis could cover most of the monthly mortgage payment with that stimulus check of $1,200, but San Francisco, just 8% of people in San Francisco, it's going to cover their cost of housing. So a $1,200 check in San Francisco might make your monthly payment on a shed if you live in someone's backyard, or maybe if you're renting a room from somebody or a garage, but unlikely even if you live in a one-bedroom apartment there in San Francisco. I'll go ahead and link to that article. I think you get the point. The $1,200 stimulus checks are not going to help many people, considering the cost of today's rents and housing. But unlimited bailouts for the banking institutions and corporations. So I'd like to hear from you down in comments on this one. What do you think about the timeline on this? We know that homes are in bubble territory once again, not in every city, of course, like we just discussed, but in many of the major metropolitan areas. What do you think about the timeline? Is this going to be happening pretty soon? Are we going to see falling home prices starting next month? Well, if you look at our previous report, home sellers are already in many cities slashing their asking prices, and that is going to lead up to lower sales prices, in my opinion. The question is, how soon are we going to start noticing this in the final sales price of the homes? Well, when the April numbers come out, and they won't be out until May, we're going to take a look at it. But for now, we do see sellers slashing prices, especially in San Diego, Vegas, and many of the West Coast cities, Portland, Oregon, and others. So we'll keep an eye on it. Thanks for watching, everybody. Bye for now.